Question 5c was the hardest question on the paper, so the average result was only 18%. Fortunately, it was only 4 marks, but the question itself, you need to be able to understand what it's asking before you can answer this question. So what it's saying is net cash flow from operating activities was less than net profit despite receipts from debtors exceeding sales revenue by $5,000. Based on this information provided, explain 2 reasons for this result. So what we want to remember is that cash is simply the amount, or the cash balance is all the inflows that come in minus the outflows, which will give you a net increase or decrease in cash. That is different to profit, which is revenue earned less expenses incurred equals net profit. So what we're told here is that they're different figures, so how could they possibly be different? Now in particular, we're told that operating activities are less than net profit, so let's try and remember what they are. So operating activities, we're looking at inflows from cash sales, collecting from debtors, or GST collected. Could also be other revenue, such as interest, as long as it's actually been collected, say maybe a commission as well. And on the other side, the payments will be payments to creditors, buying stock, paying for expenses, and paying GST. So they're the ones we're going to look at. What we need to remember though is the ones we can ignore. We don't want to talk about anything to do with investing activities, which would be selling non-current assets as an inflow and buying them as an outflow. And we want to ignore financing activities. So we don't want to talk about anything to do with borrowing money either from the business or the bank, and therefore repaying it back to the business or taking it out as drawings. So we can ignore that too. So basically the question is, how can your net cash from operating activities be less than the net profit? So remembering how they calculated, what we're told is, well, the net profit was $120,000. So what we're told is from operating activities, so providing goods and services on a daily basis. We don't know what that number is, but we know it's less than 120. So that's all we can assume. So the questions we really need to ask is, well, how can we have net profit go up, but operating activities cash go down, or maybe just stay the same? How could something be good for profit, but either have no impact on operating activities, or actually make it go down? On the other side, the question we could ask is, well, what could make operating activities cash go down, but actually increase net profit, or maybe make net profit stay the same? So if we can answer those 2 questions, we can start to put an answer together for this. So what we'll do is divide this into 2 parts. On the left-hand side, let's think of some reasons why operating activities cash could go down, but net profit either go up or stay the same. So one reason could be you pay back a bunch of creditors more than the actual cost of goods sold for this period, which is an expense. So let's pretend, for example, you paid creditors $80,000 this period, but only sold $60,000 of goods. Well, that would be a circumstance where your operating activities will go down more than your profit. Expenses paid, maybe we had expenses paid which were greater than expenses incurred. So perhaps we prepaid an expense, or maybe we paid off an old accrued expense. So for example, we paid off some $15,000 which included some wages for last period, and wages for this period were only $12,000. That would explain the situation we're in. We could go and buy stock but not sell it. So if we paid $30,000 for stock but hadn't sold that stock yet, that would result in operating activities going down and profit not being affected. We could pay GST or settle GST, and that could be more than the GST collected. So let's say we paid $1,800 of GST. Well, that's going to make operating activities decrease, but not net profit. Maybe we could prepay expenses. So we prepaid the rent for 12 months this period for $900. That's not going to show up as an expense for this period, or only 1 month would. Debtor receipts decreased and were lower than credit sales. So let's say we made credit sales of $86,000. Well, profit would go up by $86,000, but we did a bad job of collecting them. We only collected $47,000. Well, that would be an instance where our profit would end up higher than our operating activities. So they're all perfectly valid reasons we could go with. Let's have a look at the other side. How could net profit go up, but operating activities either go down or have no impact? Maybe we had high credit sales, but we didn't collect everything. So we just sort of looked at that example. Maybe we made credit sales of $95,000, but we did a bad job of collecting them. Only collected $71,000. Possibly we could have had a stock gain. Now, stock gain would increase profit, but actually not increase cash. So that would explain our situation. Likewise, we could get a discount, say $700 from our suppliers. Well, that's going to make our profit go up and have no impact on operating activities. Maybe we could earn some interest, but we haven't got it yet. So we've earned a bit like a credit sale. We've earned $150 of interest, but maybe we don't get it until the end of the year. So they're all possible reasons. So what we need to do now is actually go and look for proof in the question. Did any of these happen? So let's just take what we've got. So we've been given the balance sheet balances at the start of the financial year, which is 30th of June 2014, and then at the end, 30th of June 2015, as well as some additional info. So basically we're looking for things that there's direct evidence or proof happened, or there's nothing to contradict it, they didn't happen. So let's start. We looked at accrued wages. Looks like the accrued wages balance has gone down by $1,300. So what that means is expenses paid were greater than expenses incurred. So that's a great reason, and we could use that in our answer. So let's keep that as a possibility. We're also told that creditors are going to go down, yet stock levels remain the same. So what does that mean? Well, it basically means that I'm going to pay creditors more, yet I'm probably roughly going to sell about the same amount of goods. So that would actually explain you having less cash or operating cash than your net profit decreasing. So that's another one we can use. Facts of the case, all sales and purchases of stock are made on credit. So what does that mean? It means that this third option here, maybe we bought stock for cash but didn't sell it, that's not a valid answer. In fact, we're not going to get a mark for that because the facts of the case say all sales of stock are actually all purchases of stock are on credit. So we'll get rid of that. GST paid or settlement was greater than GST. Now we don't really have any info to contradict that, so that could be something we could use. Prepaid expenses, there was no proof, so there was nothing in our balance sheet about prepaid expenses we'll get rid of. And lastly, debtor receipts is an interesting one. It says, from the introductory sentence in the facts of the case, receipts from debtors are actually higher than revenue. So that would not explain what happened. So debtor receipts can't have decreased and were lower than credit sales because it actually says receipts from debtors were higher than sales revenue. So I'm going to get rid of that too. So there's three reasons how operating activity cash can decrease, but net profit can either not be affected or go up. What we can do now is look on the other side. So let's look through those reasons where we said, how could your net profit go up, but your operating activity cash either go down or stay the same? So let's look at the facts of the case. Receipts from debtors exceeded sales revenue by $5,000. Well, that's the reason we just spoke about. That's actually going to rule out this first option here. Credit sales were high, but not all debtors were collected. Well, that's clearly not true. Receipts from debtors were $5,000 higher than credit sales. So we'll get rid of that. Was there any stock gain? Now, we're only looking for information that contradicts this. So in this case, we're told that stock levels remain constant. So really, that's probably not one, given that we sold roughly the same amount of stock, our profit was good. We're going to get rid of stock gains. There's no proof of that. Were there discount revenues earned? Well, there's nothing to contradict it, and actually there's probably something to support it. Creditors' control is going to go down. Now, a lot of that will be money that we've paid, but also they might have given us a discount. So what we'll do is keep that as a valid answer that we could talk about. Lastly, interest revenue is earned but not yet received. Is that something we could use as a reason? Well, I can't see any assets in terms of investments. I don't know or don't have any proof to contradict it, but it's nothing really there to indicate it did happen, so I'm going to get rid of that. So what that left me with was the following 4 reasons that would explain how your operating activity cash could go down, but your net profit could go up. So what we need to do for marks here, we've got 4 marks. We want to identify any 2 reasons. Now that's tricky. It's taken nearly 10 minutes to go through all that and figure out some possible reasons. And then for each of those reasons, provide some proof that it actually might have happened. And then together, if we explain that, that'll equal your 4 marks. How did the state perform? Well, this was the lowest score on the paper. 69% got 0, so a lot of that might have been kids just not attempting it and trying to get the practical parts of the exam done. And at the top end, only 5% of the kids were able to get 4 marks. If you look through past papers, this is one of the lowest average scores on any paper, any question on any paper in the last 5 years. The average marks were 0.7, which is exceedingly low. Examiner's comments. Low scoring responses refer to drawings and low repayments, etc. They are not actually operating activities, so we can't get any marks for those. Another common error was referring to credit sales being higher than collections from debtors. Now remember, the question actually contradicted that and said receipts from debtors were actually $5,000 higher. So make sure, again, we're not going to give reasons that are contradicted by the information.